Welcome Trading Academy and Paris Trading Academy. So today we're going to try to take some trade on the Nasdaq future. Our life is going to be structured at the same as the usual. We're going to start by a quick look at the news, even though there's not a lot today, the economic calendar, the way the different asset class has moved. Then afterward, we're gonna look at the market, do a quick Nasdaq, do a quick review of how it behaved on the last week and a bit more, and then we're gonna do some Q&A from the question that you send us. Sometimes you can you can send them to us either in the chat live or on by a private message, and we will try to answer them. So today the questions are more going to be about the different asset class and the financial product, and we're going to see next time if we have some other question. So as a quick reminder, this is not investment advice, it's purely for educational purpose. So anything I say is only my opinion and should clearly not be considered investment advice. Trade at your own risk. Even if you take position depending on what I say, it's your own responsibility, not mine. So let's start with the news. So like I said, there's not a lot of news for today. If we look at investing, basically not really a lot, but a lot of move on on the different asset classes, but mostly it's the main news is about the optimism about the central bank hike rate policy. We had England Bank of England that said that had a positive inflation number, therefore people think they are going to stop their rate hikes. We've got the Fed that has the US that had good inflation number and bad employment statistic, which would tend to indicate that the rate hike is soon to be over, and several other news like that. So there's several indications that seems to indicate that the rate hike is over. Another important point was 2 days ago, so on Wednesday, was the meeting between President Biden and Xi Jinping, where they indicated that they were going to make they took several commitments to encourage collaboration between the two countries, so that's also is a pretty good news for the world economy. So that's another one of the news we were watching, so that would be more optimistic. If we look at the weekly economic calendar, like I said, we had a lot of news this week. So let's take this week. It started with the federal budget balance that was slightly worse than expected, but way better than previous one. Then we had the unemployment rate in the UK, the GDP of the Eurozone. If we look at quarter to quarter, we lost 10 basis points since from last quarter. Then we had US core CPI and CPI, where we saw that not year on years, but on month to month, that actually CPI was better than anticipated. And if we look at the month to month for the year, we get to pretty close to the 2% inflation goal of the Fed. Then on Wednesday we had the Japanese GDQ and some Chinese stat, but mostly we had French CPI, English CPI. We had European Eurozone trade balance as well as core PPI, retail sale, oil inventories, lots of statistics on Wednesday. On Tuesday we've got a jobless claim where we can see that it was unexpected, as well as another cycle of tightening from the central bank was basically sold for almost 50 billion of assets on the financial market. And then afterward, today we had the core retail sale in UK that all was unexpected, and Eurozone CPI that was the same as anticipated. Then today we had like building permits, housing start, and several. We have some member, Dali, member of the FMC, who speaks in 22 minutes, and the Atlanta Fed GDP in more or less 2 hours. So we will most likely have to wait until Dali speaks before we can enter position. So that's more or less all for the economic calendar. Let's see our watch list and how the asset behaved. So we can see that, remember the future you see here have 15 minutes delay. So it's that's why it's not completely accurate and correlated with index that are actually in the right timing. So we can see basically that future are down, index like US future and US index are down. When if I show you here, you can see we are down, and quite a lot since the actual close and open of today. So we are 30% down, 0.30 basis points, sorry. If we look at European index, we can see that they're in the green, so that's kind of good for the day. But yesterday, let's take a look at the CAC, for example, even though the DAC is probably better. Yesterday, it went down, even though slightly, and they're in some kind of consolidating path before going up, because it's been a big move upward. The DAX are the same, the FTSE is the same, and Asia is dispersed. If we look at yield, we can see that yield have slightly increased, but still if we look at the US 10-year, it's 4.45, and before that we were like at almost at 5, so it's actually quite low. So if we look and compare to the indexes, where is it? It is, ça se dégage here. If we look, we can see like we're in let's take 1 month, and let's take 1 month. We can see that we are inversely correlated, basically with a peak around somewhere there, and then inversely correlated. So that's for the bond. If we look at steers, mostly they're like in dispersed order, but not really that relevant. Yeah, the short-term future are not that interesting. If we look at the USD GPY, we can see that we are going away from 152. That was a key level that the Japanese, BOJ, Bank of Japan, was supposed to defend, and we can see that they defended it. We are now at 149 and on the way down. If we look at Euro USD, we can see that we are climbing up. If you remember, we were at 1.4 not so long ago. Okay, maybe a bit longer, but in beginning of October we were at 1.45, and now we are at 1.86. And probably to continue to go up, start to think about the goal. I think is 112, maybe a bit higher. Even though now we can see that we are at already at a key level, then there's another one here and another one here. But I think we should go above this level. once again, it's just my opinion, so I might be wrong, and for those of you who watch the live, you generally know I'm very often wrong, but that's the thing. If you give your opinion, you will be wrong sometimes. The only person who are never wrong are the person who don't have any opinion. If we look at the oil, we can see that we're still on the way down, even though we are going up today. Like if we look at the WTI, like we see we're up today, but yesterday we went all the way down. And if we look for a month, seems like basically since end of September we've been on a downside downward trend. Same for the Brent. Since end of September, downward trend. So it's also good for the inflation and buying power of the consumer. Then gold, where basically the BRICS, after buying them for like a good 10 years, have decided to try to stabilize it around 2000 in order to be able to create the money, to be able to buy their new money with gold. And so that's why it's stable around 2000, maybe at the lowest 1900, but it's mostly in that range. And that's because the BRICS, so Brazil, Russia, India, China, South Africa, are trying to maintain it at this price in order to be able to have a stable money to buy, asset to back their new money that they're gonna create, or if they decide to use one of them as a replacement for the dollar. So basically, knowing all that, I would tend to be more short today for several reasons, but mostly it's the way the different asset classes are moving. On top of that, if we look at, let's take the 30 minutes, I'm going to show you on the 30 minutes, it's going to be more clear. Since we've been going up, so 26th of October, we didn't really have a strong correction. Hence, I would expect the market to have one not so pretty soon. So that's basically what I'm expecting. That the market's gonna correct at least a bit for a while, and on top of that, the different way the market moves, it's gonna be for me a sign that we're due for a correction. Otherwise, if you look, we've actually been outside of the previous downtrend. You see, we were on a downtrend and we broke it. We now have higher highs than our previous highs, but we raised the previous highs, but we need to wait to see if our next low is higher, to see if we are in an upward trend or in a range. So basically that's it, and my trade for the day are gonna be something I'm gonna trade for the day. Let me show you. I'm gonna put it here, even though it's something well, not like that, but something more like that. I'm not sure about the risk reward and everything, but yeah, something like that, like a short. Because I'm not that, like I said, I'm not confident the market is gonna still go up. I think we are due for some kind of correction. So that's basically all for it. We see we've just reached this level of resistance and it holds. We can see it's pretty strong, but we're gonna see when the market come back or the market's behaving, because it's for me pretty likely that the market's gonna come back and try it again, probably even manage to break it. So then if we go towards the Q&A, no, that was better. Sorry, I'm trying to so if we go towards the Q&A, so the first question we have, which is a pretty basic one, but it's always good to recover the basic. Like we say, we are a training center, therefore our goal is to provide training, and we accept anyone with any level of proficiency, even complete beginners. So basically, one of the first questions we need to answer is what is a share? And a share is it's a security that represents a share of ownership in the company, hence the name. Basically, when you buy a share, you become a shareholder, and you are entitled for a part of the profits and of its assets. Share and of its profit, of its asset, and you get access to voting rights and control. Shares generally traded on stock market, and the price fluctuate according to supply and demand, like basically any other asset in the world. Price is depending on offer and demand. That's why the price on the market is moving. It's because of the variation in the amount of offer and demand at any given time. So then another question is, what is a bond? So bond is basically debt. It's a debt title. It's issued by a company, a government, a municipality, or a region. And basically, when you buy a bond, you're lending money to the issuer for a fixed term. And in exchange, this issuer agrees to give you, to repay you the amount on a specified debt plus interest that are called coupons at a predetermined rate. Bonds are very often considered safer investments than equity because they generally offer fixed interest and are repaid in case of bankruptcy. They are paid before the shareholders. Basically, it's in order in case of bankruptcy, the company is to pay the government, then the employees, then the creditor, the debitors, and then the shareholders. Therefore, the shareholders very often don't have any money left. Basically, that's also why it's called a bankruptcy. It's a bankruptcy. Therefore, bonds are generally less risky, but some bonds can still be risky. For example, at the time you could lend money to the Salvador, and the Salvador was very close to default. You can lend money to Venezuela, and it's still possible they default and you don't get paid. Or you can lend money to Russia, and Russia can decide that they're not going to repay you because they want to go at war with everybody. So there's still risk on bonds. Even US bonds, where they tend to be considered as risk-free asset, even though there's a huge amount of debt by US government has a huge amount of debt, and therefore they're paying huge amount of money in interest. So there's several indications that shows us that basically it's not that safe as we tend to expect. Like for example, in June we thought they might default on their debt, and there was a huge debate on whether they would get agreement for the Congress to spend more money or to borrow more money to pay back their debt. So it's kind of a mistake to consider US government bond as risk-free assets. There's no such thing actually as risk-free assets. Then another question we get is about commodities, because people don't understand how you can trade commodities, but that's because they don't get the basic separation that is between paper commodities and physical commodities. So if you're buying physical commodities, you're buying like sugar and you get sugar. But if you're buying, for example, paper sugar, you're getting like a contract on the price of the price of the sugar to a certain date. Therefore, it allows you to cover, and it's something you can trade. When we say commodity, we talk about basically raw or unprocessed goods that is used in the production or manufacturing process. So there's a few examples, but for example, there's agricultural commodities, there's wheat, there's corn, there's coffee, there's sugar, there's wood, there's feeder cattle, livestock. There's also mining commodities where we have gold, silver, oil, natural gas, copper, platinum, etc. So, commodities is quite important in the financial market today, mostly because of paper commodities trading, where basically people are using them to hedge themselves, like big commodity brokers, traders now. Yeah, let's say traders, but basically not traders in the sense of speculator, but of actual trader, use the financial market to hedge themselves against the price movement. And then another one was how can you trade currency, and why is it by pair, and what does it mean? So basically, first, currency, it's a monetary unit like euro, dollar, and stuff like that. And it's used as a medium for exchange for international transaction. And mostly the currency are exchanged on the financial markets, on the foreign exchange market, the forex, which is one of the world's largest financial market with bonds market, even though it's slightly less famous and less used. And basically, the main reason why people do transaction on the foreign exchange market is to participate in international trade. Like if they're a French company, they're gonna trade with a French company that trades with an American company is gonna need to use dollar to convert dollar in euros, or the American company is gonna need to convert that dollar into euros. Therefore, or the euros into dollars, it depends on the side. Therefore, that's the main bulk of the transaction on the forex. It's a company trading with company, bank trading with banks, company hedging themselves against fluctuation of the price and stuff like that. Why the land currency are traded in pairs? Mostly, it's one currency against another. Like it's the euro against the dollar. So I'm selling euros to buy dollar, or I'm buying dollar, I'm selling dollars to buy euros. It works with all of them, and they are quoted in pairs. There's the base currency and the quotation currencies. The quote currency. For example, if the when we say euro USD, basically the euro is the base currency and the USD is the quote currency. If the exchange rate is 1.15, it means that it takes $1.15 to buy 1 euros. And therefore, and those fluctuations on the price can have huge implication on the international trend, investment, and global economy. Because, for example, if you're a French company that exports goods in the US, if the euro is strong, the price of your goods are going to be more expensive. Meanwhile, if the euro is weak, it's going to be cheaper for American, therefore you're going to be able to sell more for the same price. So we've covered the equities, the bonds, the currency, and the commodities. And the last one is short-term interest rate. So it's basically, or steers, we call them. It's basically a financial market instrument where there is relatively short maturities, generally up to 1 year. And basically they're basically used to assess the cost of capital. Basically, is it better to borrow money, invest money? Is it worth it to invest in this particular operation, even though there's a low risk of success, like there's a low return if I can lend it on for very short term with a high return, high yield. That's it's used for those type of things. So it's a company that have or government that have excess treasury that basically put it on the short-term interest rate market, and a company that are in need of treasury that basically borrow on this market. So that's the two main use of those assets. Then, so now I've covered basically all of the different financial asset classes, with such as the steer, the equity, the currency, the commodity, and the bond. So now I'm gonna have a short part about derivative product. So to understand derivative product, you need to understand there's like two main type of product on the financial market. There's what we call with that product with immediate delivery that we call spot, or the spot market. It's basically I buy something and I get it delivered today. Like if I buy a share, I want my share today. Or if I go to some foreign exchange bureau and I buy some dollars, I'm gonna get the currency immediately. But there's also products that where you can get the delivery of the product in a future date. It can be like in 1 month, 2 months, 6 months later. And those are derivative products. We call them derivative products because their price is derived from the price of the spot market. So the very first and most basic one is the future and the forwards. So basically a future contract, it's a standardized financial agreement between two parties to buy or sell an asset at an agreed price on a future date. So, and those agreements are traded on organized market often, and they offer exposure to a variety of assets such as commodities, currencies, stock market, interest rate. Right now, what you're looking at is the price of the future on the Nasdaq 100. This is the December one. Future contract, it enables several things. First, to speculate on price movement, to hedge against future price fluctuation, and why it's interesting for individual investor to trade on future, it's because future offers the ability to trade on margin. Therefore, it's quite convenient for a retail investor because since they can trade on margins, they get a huge lever effect, and therefore it can multiplicate their gain. Sorry, I'm slightly sick. So I've just explained to you what are future, so now let's look at forwards. So a forward is the same idea as a future, but it's not standardized, and it's customized and negotiated directly between the parties. It's basically the same it's a private agreement between two parties to buy or sell an asset at an agreed future and purchase price. Like I said, unlike futures, they are not standardized and not traded on organized market. They are customized and negotiated directly between parties. They can range any type of assets, And the main use of forward is to hedge against against the price fluctuation, the future price fluctuation of any asset. But so basically the main advantage of forward to future is in the customization. So it can be really adapted to your need. But on the other hand, it's less liquid than a future contract, and on top of that, it exposes you to counterparty risks, because if your counterparty can't honor their part of the contract, well, you're just lost. So that's the main difference between the two. Between forward and future. Then there are options. Vanilla and exotic. Today we are just going to talk about vanilla in a short way because it's a quite difficult topic. And we're going to talk about it quickly. So vanilla option, I'm just going to say option, but just remember there's vanilla and exotic, but we're talking about vanilla here. The financial contract that give the buyers the right and not the obligation to buy, it's a call option, or to sell, put option, a financial asset at an agreed price. This price is called the strike price, and before or on the expiry date, it depends if it's American option or European option. American style option and European style options. And basically option offers investors many strategy to hedge, to speculate, to generate incomes, to do a lot of things. And that's why they tend to be complicated, but also it's quite complicated to understand for several reasons, because you can buy the right to buy, or sell the right to buy the right to sell the right to sell, etc. etc. And unlike future contracts or options do not oblige the buyer to complete the transaction at expiration. If you buy an option, you don't necessarily need to exercise it at the end of the maturity date. For example, if it's a losing position, you don't have to exercise your losing position. You're still gonna lose the premium that you pay to get the option, but you're not gonna have to then take the loss of if your option is out of the money. And then lastly, there's swaps. So swaps, what it is, it's a financial contract in which two parties agree to exchange cash flow or financial instrument over a specified period. That's why it's called swap. We swap either cash flow or financial instrument. Most common type of swap are about interest rate swap, where basically parties exchange interest payments. And also there's a currency swap, where I get a payment in euro, you get a payment in dollar, we swap, give me your payment in dollar, I give you my payment in euros, for example. Swaps are used to manage risk, adjust financing, or leverage comparative advantage, for example. And those are exclusively over the counter, and they are customized to the specific need of the parties involved. And it can be quite powerful for several reasons, but mostly to optimize the financial management of company and institution, or hedge yourself against some risk and stuff like that. For example, one of the most famous type of swap, even though it's not one of the most common, it's something called credit default swap. Basically, you exchange monthly, I think it's monthly, depending on the swap, but let's say a monthly fee against a lump sum as an insurance if on a default of a debt. they got a lot of exposure with the 2008 financial crisis, because that's what was used by Michael Burry and the other one and the other big short investors to speculate on the collapse of the subprime, and they made a huge amount of money with it. It's also the tool that was used by Bill Ackman in 2020 to take profit from the COVID crisis, and he made a huge trade where he paid something like 78 millions to then I think got $1 billion in reward. So that's why they're quite important too, even though they are pretty hard to understand and comprehend. To be fair, it's one of the one I mastered the least. Then the last one would be structured product. But I'm not at all proficient in those products. But basically, it's let's say a very complex financial product that allows the investor and the issuer and the investor to create a very specific payoff structure on different assets, like for example on Disney or in the Nasdaq 500, where basically the product pay if the market is on those special conditions. So looking at the market while I was talking with you, I don't think we're gonna have a lot of opportunity until the market until I end this live. I'm still gonna continue, see if we can talk about anything. So now basically our read that basically we needed too short is still quite good. Let's see if it continues to be reliable. So far I'm confident, but it's not at any price level that interests me. It was there before the market opened, but since the market closed, since the market opened, I closed my position. Otherwise, I could have made several profit, but you should never trade when the market open, because very often there's a very strong impulsion in either side, and you can very often just get taken out of the market. So it's not necessarily good. It's actually a bad idea to be in the market when the market opens. So also it's probably one of the very last live I will be doing from home, because we're getting internet back in the new office of Paris Trading Academy. I'm quite enthusiastic and can't wait for it to be effective and working. And we're gonna have some surprise in a relatively near future. Also as a reminder, we're like a trading training center. So we teach people how to do some trading. Oh, there's a big order block here, so it pushed back the market. Let's see if it breaks it, because it seems like we're on a pretty good impulsion, even though we had some shadow coming. But finished my list, and like I said, my trade for the day was short, but from here. So I'm about 95% sure that the market's not gonna come to meet me before we reach this, before the end of this live. So yeah, as a quick reminder of our training offers. So we've got 3 training offers that are now available in French and in English. The first one's called the initiation, the second one is called the perfectionment, but I don't think it works in English, but improvement, or improvement, let's say. And the last one is the expert. So the initiation, it's 1 week. It covers most of the theoretical knowledge that is needed for trading. So we are going to talk about financial market, financial assets, financial product, technical analysis, fundamental analysis, risk management, psychology, some famous winning strategy on the financial market, the depth of market or the order book, stuff like that. Then the improvement has the same first week than the initiation, and after that we put 1 week of practice. There's 1 more week of practice, so it's 2-week session where we add some with some exercise where we teach you to write trade plan, make you write trade plan, try to execute to take the trade, etc., etc. Then there's the practice, like I said, exercise, technical analysis exercises, fundamental analysis exercises as well, stuff like that. Then after that, we have the expert, where basically the first week is the same as the improvement of perfectionment, where we have first week of theoretical knowledge, second week of practice, the third week of practice where we start to teach you to be more and more autonomous. And then on the last week you have a 2-week evaluation where you have kind of like a Propium challenge where you have 10 days of trading with basically you have 10 trading days to do a profit, to reach a profit goal, and with a loss, not goal, but a drawdown limit that you should not go over. So yeah, that's basically most of it. Yeah, fuck my life. Yeah. So I'm out. So